If you're trading gold, you've got to see this. We've got a potential head and shoulders pattern. I've been talking about this for quite a while now, so you probably know about it. We've been consolidating in a sideways pattern since beginning of April. That's almost 3 months of trading sideways, and you can see through most of June, certainly since that big move down, what was the date of that? The 7th of June. We've been seeing reduced volatility. We're up one day, down the next day, going nowhere really for a couple of weeks. It's been very difficult to find decent trading opportunities in gold. But let's go back to the bigger picture. We have a potential left shoulder here for gold, a head and a right shoulder, that big red candle breaking below the neckline. No follow through yet, but that's fine. There's no time limit on a head and shoulders pattern. We're just tracking along the neckline. And I've seen this before. You track along the neckline and then one day you just collapse out of the blue. It could happen quite soon because we're coming up to meet the 55-day moving average, which is just starting to turn lower in reaction to those down moves from mid-May to the beginning of June. Maybe that will be the trigger whereby gold starts to move to the downside. The slow stochastics on the daily chart also just starting to move into overbought territory on this little climb here. So maybe we're getting set up for a move to the downside. And this is something I've only just spotted it this morning. I don't look at my monthly charts often enough, obviously, or I would have seen this before. Now, this is April and this is May. So we've got long upper wick in April, long upper wick in May, small green body. Now that, according to my days of learning candlestick charts, which is probably about 20 years ago now, a tweezers top. Not something you see that often, but the long upper wicks show how during the month buyers came in, as would be expected in a bull trend, pushed the market up to new all-time highs, in fact, in both months. But the gains could not be sustained. Big selling pressure. And by the end of the month, the close was very close to the open, as you can see from these long upper wicks. And it happened again the following months. It's quite rare. I can't quite call this a double top, I don't think. I mean, it looks a bit like a double top on a monthly chart, but when you go to the daily chart, it looks more like a head and shoulders. But still, these are quite negative patterns for gold. Now, I don't know what the fundamental trigger will be for gold to go down. And if I am right and gold does go down, we're consolidating here so far through June. But certainly the indications are that the next big move in gold will be down. And if you look at the monthly stochastics as well, we have been overbought for quite a while. We've been overbought, well, basically for a year now, but that's not uncommon on a monthly chart. I'm just going to go to the weekly chart before I finish, not to look at any price patterns because I know what's going on there. I just want to see on the weekly chart where we are with the stochastics. Okay, we've already come down from the overbought situation. This is something else that's worth looking at. Look, on the weekly chart, I'm sure I've mentioned this before, bearish engulfing candle. Now that was in the week of the 24th of May, a month ago. So again, this is another significantly negative signal that we're seeing on the weekly chart. A big bearish engulfing candle. And we have only gone lower from there. We haven't seen a big collapse yet. But those are 3 reasons why we could see a significant move to the downside in gold in the not too distant future.